Good morning. So it was a tough day for US stocks on Friday. The S&P 500 and Nasdaq Composite experienced their fourth consecutive day of losses, which is their longest losing streak since early May. The main focus for investors was on the July jobs report from the Department of Labor and the earnings of tech giants like Amazon and Apple. For the entire week, the Dow dropped by 1.1%, the S&P 500 declined by 2.3%, and the Nasdaq sank by 2.8%. The market was definitely going through some turbulence. Speaking of which, of the jobs report, it showed that the US economies managed to add 187,000 jobs last month. While that's not too shabby, it was slightly before the expected 200,000 jobs figure. On a positive note, the employment rate improved to 3.5% to 3.6% in June. Additionally, average early earnings rose by 0.4% in July, marking a 4.4% increase over the past 12 months. Looking ahead, investors will be keeping an eye on July inflation data, which is scheduled to be released next week. That will give them a better picture of how prices are behaving in the economy. Interestingly, the yield on the 10-year Treasury note experienced its largest daily decline since early May, dropping 12.8 basis points to 4.06% on Friday. This movement in the Treasury yield often reflects market sentiment and expectations. As we move into the new week, Asian shares traded cautiously on Monday after the mixed US jobs report. There's also anticipation for upcoming inflation figures from both the US and